Hello folks, it's Pete Vakakes again and Helga James with Barr Group Mortgage. This is part 2 of our interview with Helga regarding financing and what's all involved. My next question will be, what does the credit score have to do with determining a loan rate, Helga?
There's something called loan level price adjustments. And the way that I explain that to clients is if you open up the Sunday paper and you see that this Ford truck is for sale for $30,000. Well, you walk up and you're like, I want to buy this truck. Well, great. What's your credit score? That's your radio. You know, the lower the credit score, the more options you're putting on the loan. If it's a condominium, that's an option on the loan. If it's a second home, that's an option on the loan. So each of these options that you're adding are just increasing the interest rate or the price. So having the best credit score gives you the best interest rate. We also do what-if simulators for our clients. So let's say you're at a 739 credit score, but you get a better interest rate at 740. I can tell you what you need to do to get that credit score higher to get a better rate.
So the actual credit score really determines what kind of loan you can get.
Yes.
Basically, right?
Yes.
Okay. What documentation is needed? I know, things have changed now, and there's a lot more documentation, tax returns, and all kind of things. What are the important things that you really need to get quickly to get a person qualified?
Income and assets are really income, assets, and credit. We have a great portal where you can upload that information, so it's not just going through email. It's very secure. If you're self-employed, we'll need 2 years tax returns, personal and business. If you're a W-2 employee, I'll need at least a pay stub to get you pre-approved.
Mm-hmm.
And we have about 1,200 pages of guidelines that we have to follow for mortgage loans. So, and each loan is as unique as that borrower. So once we kind of have that initial interview, we'll let you know exactly what we need to get to the next level. I don't do a pre-approval unless I'm pretty darn sure we're closing that loan. You're gonna have to get a divorce or something
crazy has to happen.
Do something crazy for me not to close it.
Okay. Why does a lender need a condo questionnaire when trying to finance a condominium in our area?
Fannie Mae and Freddie Mac both require condo questionnaires, and there's a new addendum to Freddie Mac. We have a database that we use where as we collect these condo questionnaires, we add them to our database. It's really important to use a local lender that has a database like that, because I will know just by looking in my Dropbox, this condo's good, this one's not good, this condo's good, this one's not good, I need an updated budget, we're just missing the additional addendum. I'll have all that information. So when you're ready to look, you and Pete will say, let's look at these 5 units, and I'll say, well, only 3 of those will work for the type of financing you want.
Are there other alternatives if you can't do a Freddie Mac? Are there other options that may require a higher interest rate, or what's called a portfolio loan? Just touch on that a minute.
Yeah, there are portfolio loans available. They do have higher interest rates, but they require less documentation. So, that's the trade-off. You're either going to go through the pain and agony of the documentation to make sure the project qualifies, or you're going to pay a little higher rate.
And also the down payment is different on a portfolio loan. What's required on a condo loan
It's
today?
best to put 25% down on a condo.
Okay.
That's really the best option. Because of those loan level price adjustments, you're going to pay more if you don't put 25% down, which will put you into the same space with the portfolio loan.
Okay, in other words, more skin in the game there, the better
Yes.
chances you're going to have of getting
You got it, Pete.
Okay. Okay. As far as what is the difference between a second home interest rate, primary residence, or an investment loan rate?
Those are those options that we talked about. So when you're going to buy a primary residence and you're going online, you're saying, what are today's interest rates? The interest rate you're going to see is for a primary residence with a good score and a good down payment. That's what everyone's going to advertise to you. Then when it gets down to reality, we're going to look at what your credit score is. Is it a second home? Is it an investment property? FHFA, which is the government entity over the conforming loans, is very focused on lower income housing, primary residences right now. So they've instituted a hit to those interest rates for second homes and investment properties. So you're going to see a higher rate for a second home than a primary residence, and an even higher rate for an investment property.
And if you're if you're a first time home buyer, can you not get in with a less down payment if it's a primary residence?
Yes. Yeah, there is as little as 0% down on the USDA loan that you can do as a primary residence if you qualify.
I got you. So we do a myriad of loans here, for investment, single family, that kind of thing. I don't want to thank you very much for your time
Thanks, Pete.
today. I would highly recommend calling Helga James at 251-975-1800, and she will be more than happy to send you to her portal, and you can fill out the questionnaire, and she would love to help you. Thank you again for your time.